Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Wednesday, January 19th, 2011. This morning I'm talking about Euro Champ, Dollar Chump. And as we can see here from the daily chart I'm looking at, we can see that the Euro has been higher against the dollar for 7 out of the last 8 days. What I've done here is I've put a little Fibonacci retracement level on the chart here from the November highs last year to the lows we put in early January. So it shows that the next stop for this pair could be up around, say, 135.85, 136 even, okay, and that would be a 50% retracement level of the move lower. Now, one of the reasons why we have this move happen is because we've got dollar weakness, we've got a sluggish economy here in the U.S. This morning in the U.S. we reported declining housing starts, which missed analysts' forecasts. All right, there was an increase in mortgage applications and building permits, but we're going to have to see how that translates over to the housing market going forward. But what this chart's showing is it really highlights the difference between sentiment that we saw earlier in the year when there was dollar strength and euro weakness, and at that time we were thinking, well, maybe the economic data was improving here in the U.S. and perhaps that's why we were seeing environments where we had higher stock prices and a higher dollar. But I think it's really more a function of what was going on in the eurozone with the debt crisis and how the market reacted to that and the risk. So it looks like maybe the correlations are starting to turn themselves around. We've got commodities higher this morning with dollar weakness. As you can see here on the chart, we've got the Aussie higher, okay, back up over parity with USD. All right, what we have also though is we have the Canadian dollar. Just want to show you the loonie. Okay, the loonie is a little bit lower. Looks like maybe we put in a bottom here around 98.50. Okay, that's a continuation of yesterday's Bank of Canada interest rate announcement, where dovish comments from Mark Carney, the Bank of Canada governor, have people thinking that maybe they're going to sit on the sidelines for a little bit as far as rate hikes go. Now, overnight in Australia, the Aussie's higher, even though they had lower than expected consumer confidence figures. But if you think about it, with the flooding problem that they have there, this really isn't that big of a surprise. So I think the market's sort of shaking that off as we speak. All right, today also marks the first China state dinner that we're having at the White House, and President Obama is going to attempt to repair the relationship that we've had with China, but don't expect anything really to come out of this. It really makes a nice headline, but that's really going to be about it. Later, or I guess it's tomorrow for us here in the U.S., China's going to be reporting their GDP figures as well as some CPI data, PPI data, and industrial production figures, and that's going to give us an idea of how the Chinese economy is doing. Now, the Chinese economy has been driving the global economy as of late, so if that slows down, then we could see a pullback here in Aussie and Kiwi and some of these other countries that export the raw materials to China. So we're going to keep an eye on that one for tomorrow. All right, and then lastly, I just want to look at the UK here. Okay, we've got the pound a little bit higher versus dollar. All right, but you can see it's weaker against the rest here. And they had jobless claims figures came in lower than expected. All right, it's at a 3-month low here, so that means less people are applying for jobless benefits. All right, but the problem that they've got in the UK is that yesterday's CPI data came in much hotter than expected. So while this would normally be positive for currency, as the expectation is that the central bank is going to raise interest rates, all right, it actually is a little bit of a negative over there in the UK, because what that's doing is, because they've decided to reduce spending, take on these austerity measures to handle their deficit problem, that they are now facing what could be a stagflationary environment. So we're going to have to see what happens there. But right now it's really dollar weakness that's driving the pound higher versus dollar. But as you can see from the side here, the pound is weaker versus some of the other currencies out there. So that's really what we're looking at today. We're going to check out that U.S. CPI data tomorrow. We have U.S. initial housing initial jobless claims numbers and existing home sales tomorrow, and that's really going to show us, give us a better picture of what's going on with the U.S. economy. But absent any further problems in the eurozone with regards to the debt crisis, there, it's unlikely that the dollar is going to turn around and start to strengthen against the eurozone. But if we get the Chinese pullback, then there could be a rush to flight to safety trade, which could strengthen dollars. So, going to keep an eye on China tomorrow and the existing home sales and initial jobless claims. So that's what I've got today, folks. folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.